Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Paul M., Dave V., Brian H., Edward S., and Sean M. On the program today, we've got a new guest and company joining us. Mr. Geordie Mark is with us. Geordie is the Chief Executive Officer of Blue Jay Gold, an Ontario and Yukon Canada focused private gold exploration company that has a number of exploration projects that it is advancing, including the Pichette Gold Project, which is nearby to Equinox's Greenstone mine, as well as the recent in-progress transaction to acquire the Skookum Gold-Silver Project in southern Yukon. Blue Jay Gold is in the process to potentially list in the near future on the Toronto Venture Exchange under the symbol JAY, and you can learn more about the company via its website, bluejaygoldcorp.com. Mr. Mark, welcome to the podcast.
Andrew, thank you for having me, and thank you for listening to the audience.
Yeah, Geordie, it's good to have you on the program and introduce Blue Jay. This one is an interesting one, and hopefully our audience can get some initial information from you today. You are new to the podcast, and as customary, why don't we start off here by you giving us your background and experience in the junior natural resource sector?
Yeah, thanks for asking that question, Andrew. Exciting time to be in natural resources, I think. I graduated, I guess, more than 30 years ago in geology, went on to my PhD looking at regional systems and how they manifest to produce mineralization and how to go about exploring for those and vectors towards mineralization, working with companies to develop those target generation indicators. Basically, since then, and certainly in the last, say, 19 years, coming out of Australia, I've lived in Canada, in BC. Most of that time, I actually worked in the financial equities markets on the buy side and sell side as a mining analyst, covering all sorts of commodities globally, looking at investments from companies as large as BHP down to grassroots explorers, but also certainly in the last 10 years, predominantly covering precious metals companies in most of the continents in the world. So lots of experience and lots of experience gained in terms of the pragmatic nature of managing markets and exploration programs in a view of where risks are, not only from the drill bit, but all the way through to geopolitical risk in different jurisdictions. So lots of experience, predominantly coming from the capital market side, geological exploration, discovery, and production.
Thank you for that information. Always good to have a bit of a diverse background across this sector because it's so important. There's so many different components you have to have a grip on. So appreciate the information on that. How do you look at the gold market? I know this one's always a difficult one and always can be a long discussion, but just how do you see the gold market today in terms of market events out there, as well as investor sentiment for exploration companies in Canada?
Over the last 15 years, I can't see a better time for launch a new exploration company around grade in a safe jurisdiction. I think the market is looking at geopolitical instability, fiscal instability, of course, what's happening with tariffs and other geopolitical events in various parts of the world, which obviously has bolstered gold price very well, and silver's coming alive also. So the commodity prices are certainly coming alive and positioning extremely well. What we're seeing in terms of the equities, though, is traditional approach in terms of the leaders and equity response to commodity price movement. Traditionally, the royalty companies, larger producers, and then moving into the intermediate producers, etc., on a broad scale. And we've started to see that over the last 18 months. I would say that ultimately we're starting to see on successive producers, operating margins, etc., we start to see the trickle-down effect of broader-based investor sentiment coming into the resource-related non-producing equities. And this is an ideal time, I think, ultimately, as that rotation starts, to be launching a new equity looking at grade in a safe jurisdiction. So I think we're positioning really well. I think the commodity price is certainly for gold has formed a great base here, just to about 3,300 US. But that's related more so, I think, in terms of the uncertainty on tariff impacts, the fracturing of globalization. We haven't seen the impacts of weakening a US dollar as yet, and that predicated on, say, changing central bank interest rate policy. We expect that, from put the analyst hat on, expect that to potentially put more influence on commodity price movement, not only in gold but across the board as the Dixie weakens. We're looking at this being an ideal time for natural rotation in natural resources, related equities, but also downstream on the smaller plays that provide leverage for discovery, growth, and success. So I think it's a great time. Commodity prices are working well. Coming into Q2 reporting, I think we'll start to see improving operating margins across the board for the producers, with gold price having come up quarter on quarter. So we're looking at a pretty good roll into the rest of the year, I think, for natural resources, particularly precious metals. Silver sort of touched up to $37 an ounce. We're seeing that come back with response. Historical ratios would suggest that silver could have a long way to go, and is, in fact, actually quite commonly sort of lags gold in a sense of pricing, and actually usually has a pretty good run when you start to get more rotation from a generalist point of view into the non-producing equities. You start to see allied response into silver. So I think we're in a good place now for a foreseeable future, based on a range of broader based parameters, not only global central bank interest rate targets, but also probably ongoing geopolitical uncertainty in terms of fiscal regimes, asset ownership, etc. So we're in a pretty good place there for what we're doing for discovery and growth in precious metals.
Good overview. Appreciate you walking us through all that. And there's a lot of fundamental issues at stake here. The volatility of geopolitics, as you well know, and we've seen over the last few years, have built into this. Fiscal irresponsibility has been built into this. Interest rate changes in policy there could also impact this further. Weakening of currency, of course, as well. Lots of good stuff, and definitely I agree. I think the flow down effect we are in the early days of, and we're starting to see this at the top, but it will come in down towards the bottom. And also, as the companies in the junior sector continue to, some of them continue to have success on a company specific level, that's obviously a key driver as well. So really appreciate you walking us through how you're looking at this. Well, why don't we jump into Blue Jay here? It's a new startup. It's a spin out of Riverside Resources. And you guys have also put together a transaction, which we'll get into a little bit later. But give us a brief overview and background of the transaction to spin this out and create Blue Jay, as well as why you took the job to lead the startup.
Yeah, thank you, Andrew. Great question. Look, for me, pivotal assets to actually launch Blue Jay. Blue Jay is currently a private reporting issuer, spun out from Riverside, a prospectivity generator. I went out to site last year in October, looking at predominantly Pichette, but the other assets, Oaks and Duck, in Ontario. They race the Greenstone gold mine. What I liked about Pichette, Oaks, etc., was historical gold mineralization that hadn't been followed up on. And Pichette, 1952, very high-grade gold results, shallow drilling that had been left dormant. And this was the modus operandi back in the day. Find surface gold mineralization. If you did hit an ounce, you moved on. And in this case, this ground had been under lease until about 2023, and then the lease lapsed, and then ultimately came into the hands of Riverside. So the opportunity is to follow up on historical drilling that just hadn't had modern day work on it. When we look at geophysics, we can see that surface-related gold mineralization, the drilling at shallow depths, depth potential, continuity along strike. Bring that together with modern-day techniques on geophysics, and you can see more than 12 kilometres of strike length on the host rocks and shear zones that control mineralization, we think, that emulate the styles of mineralization that host the Greenstone Gold Mine, which is kind of a 25-minute drive away on the Trans-Canada Highway. All of those facets together sort of lend into a discovery potential at Pichette. So we've got about 80 square kilometres of ground in the area. You know, what I like is, thesis behind the company is explore for high-grade gold in brownfields areas where you can do exploration for less, and the thresholds for transactable value are less because you have existing infrastructure, established mining production. You can get into production easier because, you know, the crust is working for you. You know, you've got styles of mineralization in a region that has produced historical production and through to today. So we're in a place where you can do it for less. The risk around knowing that you've got mineralized systems already here and you've got established infrastructure that ultimately enable you, if on discovery, to do things, discovery success, a higher probability of success relative to remote regional sort of exploration. So, you know, just be in the right areas where things cost you less to do. And now, in that sense, those assets were spun out of Riverside. And indeed, to fund the work that we're doing on the ground, we did 2 placements, a founders round into Blue Jay, which is originally a subsidiary of Riverside. And the last placement, just around PDAC or March, April this year, was around about 40 cents, or with 20 million shares outstanding, that would be around about an 8 million capitalization on the company there. So Blue Jay is set effectively as a tier 1 jurisdiction precious metals or gold explorer in brownfields areas. So we're looking to develop portfolios in brownfields areas that basically we can do things for less, where our thresholds to transactable value we think are less because of the infrastructure around our projects.
Thank you for going through that, and we're going to talk a little bit more on some other projects here in a moment and more into the projects. Just to finish on capital structure here, you talked about the capitalization here, some of the past raises. Just tell us where we stand right now as far as where we are on cash on hand, and then also the major shareholders, including yourself and management.
Capital structure, about 20 million shares outstanding, probably around about $500,000 left in the kitty. We're looking to do a go public round very soon. A lot of the shareholders come out of Riverside. Riverside is about 40+% out of key shareholders out of Europe. Most of those came into the 2 prior rounds into Blue Jay, and will look to come into the go public round. These are long-term investors that obviously like gold and safe jurisdiction exploration. So ultimately that's key. Management directors hold just under 10% of the company. Rick Rule holds around about 3%. He came into the founders round and into the seed round. So a good core of group, and additional shareholders come out of high net worth individuals who look at long-term exploration projects and hold onto their stock. They see value in that ultimate capitalization in discovery, success, and growth.
Very well. And with that, some of the key staff at the company that's supporting you, Geordie, what do they bring to the table to support their growth and, of course, success at the company?
Thank you for that question. Chairman is John Mark Stout. Been in the industry a long time. With BHP, Magma Copper, Tech, has been running Riverside for 18 years now. Riverside prospectivity generator, still only 74 million shares outstanding, 5 million cash in the bank. Just very astute geologist. So picks up good projects. He picked up the projects in Ontario. Very good at picking up geological-led projects. A lot of experience in terms of resource exploration, discovery, and in many parts of the world, most continents on the world. We also have Kendra Johnson, the other board member, very good geologist, currently capital markets, pear tree, so understands flow of money at the moment, which is important for a junior. A geologist, so lots of practical experience in North America, has lent a lot of experience and aid in terms of interactions with government and people in different parts of the country that enabled us to move through some acquisitions. Now, we also have on the technical advisors on the board, or soon hopefully to be on the board, Scott Hicks, part of the Lumina group of companies, probably instrumental in moving Luminex through to transaction discovery, as well as Lumina Gold, which just recently closed their acquisition for Cangreas and Bestia. So very important in terms of his was a banker at RBC and BMO beforehand. So in terms of capital markets experience and banking related experience, very important sort of segue coming through. Mario Swansoka, another geologist, lots of experience. Actually was at Macquarie years ago in terms on the banking side. So we have a good balance of banking experience, finance. As well on the board, we have Colin Healy, MBA, strong analytical background, mining analyst at TD Bank before then on the commercial side. So we've got a very, very good balance of people with not only geological experience, capital markets experience, pragmatic views in terms of looking at success on juniors and how they should be run in the capital markets in terms of messaging, results, projects, but also, financial side, looking at where your costs are, understanding the pragmatic cost of capital considerations. Pivotal to the management team is also the CFO, Rob Scott, who was the CFO of Great Bear, obviously a very successful exploration story. So very seasoned operative on the finance side. So we have for the scale of the company that we're at, we have a very strong management and board structure that we'll look to hold together to come through and list soon.
Good diverse background there. Of course, our mutual friend Scott Hicks there as well, being part of this, and a good setup you guys have coming out of the gate here, Geordie. So I appreciate you going through that. Well, why don't we go into Pichette Project in Ontario? Why don't we go with that first, and then we'll move our way over to Yukon. But cover off the history here of this project. It's an interesting one. Of course, it's close to Greenstone Mine there in Ontario. It has an existing historic discovery. Talk about some of the near-term plans. Once you guys get up and rolling here, talk about some of those immediate objectives at the project to test the prospectivity of this project and, of course, the expansion potential.
Yeah, thanks. Pichette, great example of a dormant discovery. So coming into an area where you've got high-grade mineralization. This was drilled in 1952. In fact, the people who drilled this went on to actually drill and discover hard rock, which is the deposit that's exploited by Equinox at Greenstone. What I love about this is ultimately, the modus operandi back in those days, gold production at the Lech gold mine, just to the west of Pichette, that was operating at that time around about an ounce a ton. So that was the operandi. Find an ounce a ton, go underground. Find those grades to cover the capital cost to go underground. We had some very, very handsome grades. You've got very good grades, plus 3 meters at 6.7, 2 to 3 meters at 6-7 grams. Other intersections, 3 meters at 5, 3 meters at 3.7, all along a 600 meter strike length in banded iron formation and related sheared mafic volcanic rocks. This is all shallow, less than 30 meters depth. So didn't meet the grade back then of those days, but certainly when we look at where Greenstone is operating today, just over a gram, you pick up volume, and then now you've got yourself a modern day economic deposit, and that's our view. Come back using modern thinking, modern techniques to look at scale of systems, look undercover, which wasn't really the test back in those days. So we see ultimately an opportunity here to look at something of scale. We think we've got, basing on the magnetics, etc. so far, multiple targets are above a kilometre long to be able to already test today. But we try to do things pragmatically and in an ordered fashion. You do it in an ordered fashion to generate targets and target criteria to deploy your capital in the most cost-effective means. So we try to layer our data in this sense: geology, surface chemistry, structural geology, your geophysics, not only magnetics, but we'd also be looking to follow up on IP to look at where your disseminated sulfides, your silicification may occur, to highlight the coincidence of those features. As well, we'll start as soon as we can undertaking surface soils work, systematic grids that have never been done. When I went out there in October, saw surface-related gold mineralization along channel samples. We had excellent channel samples that came back, verified the former drilling. We tasked the team to go further out to the east as they could, and everywhere they found shallow rock below the till, lighted up with gold mineralized, deformed, and altered banded iron formation metavolcanic rocks. What I liked about seeing the rocks was the rocks not only obviously showed visible gold mineralization, which is great, but they're incredibly altered, which shows that you've got large-scale intense alteration systems that can carry fluids a long way. That's what I like about the system. The coincidence of those, the geological traps, not only in terms of the stratigraphic traps, but the structural traps around folds and intersections of faults and stratigraphic traps. There are many of those already just on Pichette itself, and Pichette's more than 30 kilometres or so in a surface footprint. So there's a lot to already test here. So coming out of the gate, just on Pichette alone, we're looking at multiple targets to test. We'll do our soils, IP, extend our magnetics, and then we can come in, develop our targets, and drill later in the year. For me, this is the cheapest place to drill for a time to drill here is effectively October, November, and through winter. It's flat ground, straight off the highway. It's easy to get to. You don't have to build a camp. You base it out of your exploration out of local communities. And we're thinking on the order of just over $300 a metre for drilling because we're so close to existing communities. We don't actually have to build a camp, etc. So it's very easy to do. So this provides a great balance to be able to run straight into exploring on the historic discovery, but also pick up targets just around that. So it's very exciting to be on this ground, not only because of its potential, but it's also its location relative to existing production. Greenstone Gold Mine, we're basically straight on the highway, Trans-Canada Highway, straight down the road, around a 25-minute drive, you've got Greenstone Gold Mine. So practical reality is we think we've got large-scale targets, 3 to 5 million ounces, but, ultimately, if you find something that's getting on the way to that, that's obviously of interest to a nearby party, given where they're operating at the moment in terms of grade. So very exciting opportunity. Lots of work to do over a number of seasons, I think, to build out, but we can get drilling pretty much straight away after we do our pragmatic sort of soils and our IP work. So very exciting times to come in on a historical discovery. This is kind of modus operandi for one of Equinox's projects just to the north of us called Brookbank, just on the other side of the highway. It's got almost 700,000 ounces. It was discovered in 44, not drilled again for 55 years, and I guess the initial resource came out just after that. So this is where we see the opportunity come in, reinvestigate using new understanding of geology, geological process, and instrumentation to integrate data sets for improved targeting and strategy around cost-effective exploration.
This area is definitely prospective, and it's a good spot to be in. You guys are right in the mix here, and definitely I would suspect that there'll be increasing competition in this area. It's definitely a good spot to be looking. As far as schedule goes, it sounds like drill targets to be identified and quite possibly a drill program would maybe commence sometime in 4Q 2026. Is that about right? Or what is the thinking there as far as that initial drill campaign that would potentially start based on the work ahead of that?
I would say later this year, 2025. So
Okay.
yeah, I mean, you could easily go, we'll drill straight under the existing mineralization and laterally. That's the easy target. But let's build a strategy around assessing targets and rank them based on criteria. Soundness on that is just create something in a more measured approach to exploration. So that's where we integrate soils and IP, etc. So we'll develop those targets up, and then we're looking to drill coming out later this year.
Oh, that's great. Definitely right out of the gate here. So appreciate that. Very good here. Any other comments in Ontario? You have some other projects, oak and duck gold exploration projects. These are also not far away. Any immediate plans for these coming out of the gate, or is this, kind of lower on the priority list for later?
Yeah, given the magnitude of the results on Pichette from historic drilling, the major focus really is there. Oaks has had some drilling that was completed around about 4 years ago. Discovered a very interesting shear-related high-grade gold mineralisation. You could potentially go back there and actually follow up ground truth some additional geophysical targets outlined through airborne magnetics. And then Duck has got some very interesting structural targets based on some work done from magnetics done a few years ago. You need to really ground truth those and build them up. So we really have a portfolio, the typical sort of pyramid of projects with Pichette at the hierarchy of the apex there, and Oaks and Duck falling behind that. That's kind of what you want to be able to start to generate when you're looking at pivoting around projects and proper allocation of capital around risk. So I'd say ultimately, they're secondary to Pichette, but we'll continue to move things along.
Sounds good. You guys got a good portfolio in Ontario. Well, why don't we move over to Yukon, the Skookum Project, which is subject to a recent transaction you guys have done here. This project has an existing historic resource and some historic production associated. This is, of course, recent acquisition for the company and finishing up under a definitive agreement. Talk about the acquisition terms here, Geordie, as well as what the plan is with this project coming out of the gate.
Yeah, we're very excited with Skookum. We've been working on this in the background for 7-8 months now. We signed basically an LOI earlier this year, and before then, obviously, we're doing due diligence as well. I went to site there with our VP of Exploration, Freeman Smith, in November. We drove there from Whitehorse. It's 55 k's or so south of Whitehorse by road within an hour. That's what we love about it. It fills the mantra of the company. Let's lower risk and be in areas around brownfields, so where things are done for less. You've got infrastructure, and the crust is working for you. So you've got known mineralisation either through historical discoveries like Pichette, or at Skookum, historical production where you've got continuity of mineralisation. The adage in our industry is, most gold is found around the head frame of an existing mine. That's what I like. I don't want us to have to close our eyes and swing for the fences in exploration. It's great to do, but for me, the objective of this company is let's just get on base and deliver in areas where we think we've got large targets and large scale potential, but which we can actually achieve by not having to try and hit it over the fence every time. So Skookum just really adds nicely to Pichette. Not only does it stratify the company up to another leg up with the existing resource base. It's a NI 43101 compliant resource base. It's around about 930,000 ounces of gold equivalent. Breaks down to around about just over 800,000 ounces of gold and around about 11 million ounces of silver. There's a very interesting story to tell here. The average grades about 7.3 grams of gold equivalent when we put things together. So we start at this little kernel of gold mineralisation on this very large package of rocks that had former production 87, 88, about 80,000 ounces of gold production. But really, since then, has had fragmented ownership, stilted exploration, and geology has moved a long way in the last 40 years. It really has in terms of understanding these systems. So what I like about it is we've got 170 kilometres of ground. Adding that to what we have in Ontario, now you've got more than 250 square kilometres of ground. In the Yukon, while we can drill all year round on Skookum, because there's an existing 50-man exploration camp, you have 6 kilometres of drive development. So with permits, you can drill year round underground if you want to. it's preferred to drill on a lower cost basis, in summer and shoulders. And in Ontario, preferred for lower cost exploration in winter and shoulders. So you get now, Blue Jay is a exploration, discovery and growth company around gold tier 1 jurisdictions that can drill year round, low cost. That enables you to drill targets cost effectively, not only in the Yukon, but also pivot over to Ontario during winter. So you can stretch out your exploration. You've got a portfolio where you can allocate capital most efficiently. Given the scale of the project at Skookum, most exploration dollars likely will go into Skookum with what we see currently. This is a kind of a game changer for us. We think ultimately we can see low-hanging fruit around near-term resource discovery growth around existing resources, and particularly Skookum Creek, around high-grade gold, high-grade silver, as well as multiple other corridors within this 170-kilometre package that haven't been drilled. It's amazing. There's probably at least 50 kilometres of mineralised structural corridors on the project, and they extend across a 25-kilometre footprint, east to west. So for me, it's exciting. The more we see, the more we love what we see and the potential there. So, I mean, the deal value is effectively around about $3.5 million. So it covers $600,000 in shares to a company who holds the asset at the moment, which is Tinkle. And we cover the security bond, which is around about, or demand, which is around about $2.9 million. Now, that's when we look on a EV per ounce basis, that's around about less than $3 an ounce. Acquisition cost US. You can't drill and discover for something for less, particularly around those grades. So we think we're in a very, very good place for being able to look at discovery and growth based on what we see at Mount Skookum. And in fact, we have multiple corridors, not only on Skookum Creek, where we can see high-grade gold and high-grade silver, but also in another zone called Charleston, which is at least 5 kilometres long. And then you've got Goodell, which has 2 parallel corridors, each around about 10 miles long. And then that's not even looking at the existing area where former production was, where we think there are a lot of opportunities for the mineralized epithermal systems to be re-examined with a viewpoint of where current commodity prices are. And maybe there's no regional picture on structural architecture and evolution for the entire project area. So that's one of the main aims to come in on there. This is a project of scale we think is of interest for large-scale producers, given the scale of the system, and we love what we see in terms of its potential to be able to deliver. You can give some examples in terms of where we see grade potential. You've got high grade silver dominant areas like Raqqa, which had late stage drilling in 2021, which was when last drilling happened here, was 3 meters at 580 grams silver, almost a gram gold. Right, a neighbouring hole right next to that was almost 2 meters of 1,400 gram per ton silver and a gram gold. And that looks to be a structural continuation of the Skookum Creek deposit, which in itself has some just extreme grades of 1,800 grams silver with 10 grams gold over 4 meters, continuous along mineralization. So we see this as a growth story on gold, but a discovery and leverage story related to high-grade silver and silver zones. We think Raqqa could be another parallel system or an extension of the existing Skookum Creek zone. So Skookum Creek currently is defined on 1 kilometre zone. It's within a 7 kilometre corridor, and Raqqa forms that northern 5 kilometre northern extension of that. So we're very, very excited about what we have to be able to explore and discover going forward, knowing that you want to be able to grow your resource base, but also discover new areas that could be paradigm changing in terms of the nature and scale. So geophysics, magnetics and radiometrics only flown in the second half of 2021 while drilling was being done. We'll look to reinterrogate that, bring in a new digital terrain model, do some inversion work, maybe come up and do some other large-scale gravity work to really put the system together to do systematic exploration. So given the camp, we think you can drive in there, on the closure of transaction, if it happens relatively quickly, we could be in and drilling on Skookum later this year. Segue from Skookum straight on to Pichette, and then come back into Skookum earlier next year. So we've got a great sort of role on exploration, discovery, potential, and resource growth across the Canadian continent.
Geordie, good information here on how you guys are approaching this one as well. On the transaction, the bond, is that covering like reclamation, past production, or what exactly is that bond for?
Yeah, we break it down simply in terms of 50% of that covers removing the former plant and some ancillary components, and the other 50% relates to removing the exploration camp and the rehabilitating the exploration roads and the technical services workshop, the core cutting facilities, core logging facilities, and geological office. So break down into two components, one in terms of former operations and the other in terms of what we use for modern day exploration. So the fact that you've got an established camp enables you to do exploration a lot cheaper. We think this is a sort of very attractive component in terms of it would probably cost you more to put the infrastructure in than the actual security bond. So we're pretty happy with what we have at the moment.
Yeah, I mean, the carry there is very light to be able to get that going and get this project moving ahead again and continuation here. Some of the results are quite interesting, so I'm looking forward to seeing what you guys identify on this, and then of course getting out there and doing some tests when you guys get launched here. That's going to be some good stuff to follow. Appreciate you going through that. The area is good as well. One other thing, I want to pick your brain a little bit on Yukon. What's your sense of working there in the Yukon as far as the province's continuing appetite there to see mining projects get developed and into production? How are you looking at Yukon? Maybe we can compare it to Ontario. Any thoughts there as far as working there and the pro-mining, pro-development attitude there in the Yukon?
Yeah, that's a great question. I'd say all four geologists that are either management, myself, or on the board or advisory have all worked in the Yukon. In fact, Marcio, one of the advisors, and funded Skookum Creek through Macquarie in 2007, I believe. We worked there, having spoken and interacted with First Nations groups, the government, very pragmatic, very supportive of mining, understand it's pivotal to the lifeline of the Yukon. And when we were negotiating the deal late last year, obviously there was a sentiment overhang around former events, I guess, in 2020, 2024. But I think ultimately with the approval of the sale of Minto and the announcement of the sale process for Eagle coming not only a few weeks ago, outward sentiment on Yukon being a place to invest, a growing mining industry is certainly sort of picking up. When I went into Yukon for our site visit in November, they had their annual conference at that point, and I was blown away by the pragmatism and optimism around moving forward for mining and exploration projects in the Yukon from stakeholders, the industry itself. It was just it was a sentiment that is coming out, and we're starting to see that in also the capital markets investing in the Yukon. We've probably seen more than $120 million come into investing on exploration on key projects within the Yukon. So, that's the market being open to investing in projects that would be on the table for future production. So it's Yukon's really, I think, on the precipice for sentiment rotating even further, more towards the positive sort of sentiment. So it's a good place. It's a good place to work. I think they're very pragmatic for permitting. You could see that recently in terms of announcement. They're a little bit behind in terms of their permitting for this year, and they made the statement of rolling forward and maintaining people's potential for exploring without having gotten their new permits if they've already got a permit in place. That's been very open. You can see that sort of pragmatic view to sort of having the industry in the territory. So great place to be. We like it. We will have had experience in there. We'll start to see more sentiment over time. I think potentially with more drill results coming out, say from Gladiator, etc., Snowline, Fireweed, Sitka. There's a whole range of high-profile companies that are delivering exploration in the Yukon now that I think with results you'll start to see more and more rotation into those related equities.
Appreciate your view on this and how Yukon's moving forward here. That's always good to get that, and certainly it's an area that has quite an endowment, Geordie, as you well know. So looking forward to seeing how things go with the jurisdiction here in the coming years, and good to see that they're working with exploration companies, and definitely it's been a pretty good ride for exploration companies in that area. So good to get your opinion on things here. On overall strategy, we know overall here, of course, the main goals are further discovery, expansion, advancement of the projects, perhaps bringing forward economic analysis and studies for the projects. And of course, ultimately, probably an acquisition target would be the goal, obviously by a mid-tier or a major. But overall, what's your vision? I know this is generalized here in its early days, but what's your vision for the company and time frame, and what kind of success are you looking for, Geordie, as you lead this company?
Yeah, we're here for discovery, growth, and success through building value for shareholders through developing on projects that are in areas that have lower thresholds to transactable value. So we're in brownfields areas. We like projects in brownfields areas. We like to be in areas where we have known mineralization that we can use geological prowess to find more and do it for less. So in the end, it's about trying to develop higher rates of return on invested capital based on being able to explore for less because you're in areas where it costs you less to do and because you're in those areas that have infrastructure, around infrastructure, the thresholds to developing on discovery, success, and resource growth are inherently less. So it just puts you in a better probability bracket for us. So we like our projects, we like the potential for them to be large, self-standing, but also being able to put those in areas that are lower risk jurisdictionally. So, Canada's, I think, great place to be, for new operating mines effectively over a 12-month period. You have safe fiscal regimes, asset ownership is well known, governed by rule of law. We're looking at developing a company that wants to grow based on asset selection, where we can just do the work for less. So you get more for less and build that up to ultimate transaction. In that view, I like to deploy it as a kind of a moving fish analogy. You've got to continue to keep on growing and show that you're adding value for your shareholders through adding assets for growth and or discovery. So continue to add value. And that time frame really ultimately you're looking at 2, 3, 4 years. That's the time frame. In the interim, you've the pragmatic side when I was an equity analyst for kind of 17 years, you need to be able to communicate that through results into the market to not only keep people in the story and be interested in showing that you're doing something, but also bring new people in that normally wouldn't necessarily come in at higher risk stages, but you're actually, because you're delivering and continuing to deliver, you bring people in earlier than they normally would. And what that does is obviously creates more eyes on the story, with hopefully creating more pressure on the equity stock on the right way. So that's our view. Everything is managed by select the right assets and then deliver on those assets with good success over time. So be pragmatic, look at costs of capital. That's where the asset portfolio comes in. And if you can deliver year round, it gives you a greater news flow to be able to appeal to a broad audience to continue to show that you're delivering results. So I think ultimately the pragmatic view there is to develop that exploration discovery growth vehicle where you're just doing it for less and the thresholds to success are less because you've got established infrastructure. So the experience of the management team, the board, the technical advisors all weigh in on this for strategic direction. But it takes you a few years to develop that kernel market value onwards. So, but with that saying, we think we can come out of the gate, drill straight away at Skookum on resource expansion and discovery targets, and new exciting discovery targets at Pichette. So Blue Jay really is an exciting vehicle for exploration discovery success in a tier one jurisdiction, lower risk. We see managing exploration discovery as a very exciting vehicle for near-term drilling, both at Skookum and then following on for Pichette for year-round exploration discovery potential. We think this is differential because we can explore for less because we have existing infrastructure in brownfields areas that transcend to delivering potential targets that have lower thresholds for transactable value. So we think we can start straight away on listing and start our exploration activity and drilling later this year. We're looking to do a go public round very, very soon, probably in the order of 8 to 10 million Canadian. That will provide the capital for a listing application straight after the round is completed, with looking to basically get into the venture exchange, looking in autumn this year. So that's kind of the time frame. So running straight into that. So we're pretty well positioned for all of the components there for listing application and getting out under the ticker JAY.
Very well. That's great, Geordie. Thank you for that. Well, I'm going to give you one last opportunity to wrap up here. Really good introduction here to Blue Jay for potential investors who are listening in. The company has a private capitalization of about 8 million Canadian dollars here currently. Why should Blue Jay Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
So we're new. We've got a great portfolio of historical discoveries and resources that have grade in tier one safe jurisdictions where costs are less. We can deliver year-round exploration for resource growth and discovery. We see significant potential for resource growth on the current Skookum Project, but also significant new corridors of exploration discovery, not only across Skookum, but also at Pichette. It could be paradigm changing to the story in both regions. So something new on grade in a safe jurisdiction, for me, that is an audience that is open globally, and bringing out with something on new projects is an attractive equity to be involved with over the next few years.
And Geordie, with that, for investors seeking further information, how can they reach out to the company?
You can reach out with the company. Email is info@bluejaygold.com or on a line +1 778 327 6671.
Thank you for the introduction. Good stuff here. Looking forward to keeping up with Blue Jay here, and good luck with launching the company. And we look forward to having you back for updates.
Yep, anytime. Thank you, Andrew.